Hello viewers, my name is Aditi Nayar and I'm ICRA's Chief Economist and Head of Research and Outreach, and this month's podcast is all about the monetary policy review amidst the uncertainty caused by the West Asian crisis. So between the last policy review in February and April, the global situation changed remarkably and uncertainty has been extremely high over the last couple of weeks because of the crisis in West Asia, which had seeped into both the prices and the availability of fuels across the globe. Now, in this context, India's Monetary Policy Committee chose a very wise status quo unanimously on both the rates and the stance. And we were anticipating this because of the extreme uncertainty that we have faced. We thought that it would be best to remain in a wait and watch mode in terms of taking data and development based calls from one policy review to the next. Now, in addition to the rate decision, we also have fresh forecasts for India's CPI inflation and for GDP growth on the new series that were released after the last policy meeting. CPI inflation has been pegged by the MPC at 4.6% on average for FY27, assuming a crude oil price on average of $85 per barrel and a normal monsoon. Now, while we still are looking at $85 per barrel, even in ICRA's base case for FY27, this is much higher than what the energy prices were before the crisis. Because even if the crisis is effectively now over, the damage that has been there to the infrastructure is likely to lead to prices remaining higher for some more time. And this is something that we factored in both into our growth and our CPI inflation estimates for FY27. One more risk that we need to be watchful of is if an El Nino develops before around the monsoon season. Although the reservoir levels in India are quite ample right now, and this would give a lot of insurance in terms of a timely onset to the Kharif sowing. On the GDP growth side, our forecast is a bit lower. We think that if the crude oil price averages $85 per barrel in FY27, growth is likely to be closer to 6.5% versus the 6.9% that the MPC has projected. Having said that, given the kind of uncertainty that persists, it is admittedly very difficult to make macroeconomic projections for India or for the global economy in the current context. So while these are the baseline projections that we have, perhaps this is going to be a year where projections are going to have to be revised more than once. So that's it for now, and we'll come back to you next month with our updates on the Indian macros. Thank you.